Good evening, students. There was some technical glitch, that is why there is some delay. How many of you have done problem number 1 homework which I had given you? From the receipts and payments, preparing income and expenditure account. I hope you have done. 6 and 7 also I gave for homework. Anyhow, we'll solve question number 6. If you have done the homework, please see whether you have done it correctly or not. Yes? Okay. Question number 6. So they have given you receipts and payments. They want you to prepare income and expenditure account. Income and expenditure account for the year ended 31st March 2026. Yes. So first let's prepare the expenses, then we'll go to income. Okay? Yes. To upkeep of field and pavilion, 1,15,000. Yes, that is an expenses. To upkeep of field and pavilion means to maintain the field and pavilion. Okay. One lakh 15,000. That is our expenditure. Okay. Now, next, tournament expenses. Tournament expenditure. First, read the question whether is there anything regarding tournament expenditure. Donations and surplus account of tournament are to be kept in reserve of permanent pavilion. Then subscription due on March was write off 50% of sports material. Okay, they have given all the information, but tournament expenditure they have not mentioned anywhere. Donations they have given anything, membership, sale of those neutral, subscription of tournament. See, they have given subscription of tournament, they have given tournament expenses. So what we will do is we will adjust this tournament expenses against subscription for tournament, because they have given no donation and surplus on account of tournament are to be kept in reserve for permanent pavilion. See, what has happened is here there is tournament expenses, but at the same time there is a subscription for that. And in question they have given donations and surplus on account of tournament are to be kept in reserve. That means what? This tournament expenditure is there, no? This tournament expenses needs to be adjusted against this, and whatever excess is there, that excess has to be kept as reserve for permanent pavilion. That means this tournament expenses should not be taken as expenditure, rather it should be adjusted against our subscription for tournament, and any excess money left with us. Will there be any excess left? Yes. Out of 60,000, what is the expenses? 40,000. The remaining 20,000 will not become our income, rather it is kept as reserve in our balance sheet. Reserve for what? Reserve for permanent pavilion. So this will not come in our income and expenditure. Clear? Okay. Next, what is the expenses? Rates and insurance. Yes. Two rates and insurance. How much is the amount? 10,000. Next, to telephone. 3,500. Correct? Huh? Next, postage charges. 2 postage charges. How much? 4,000. Next comes to printing and stationery. Now, Printing and stationery has a opening stock. Opening stock. How much is the opening stock? 11,000 plus purchases. Purchase is nothing but your printing and stationery coming here. See, what is the purchases? This is the purchase. This will be considered as our purchases. Sometimes they will give you here, plus in narration they will give you, in the description they will give you printing and stationery outstanding payment. That means what? Say for example, in this case, printing and stationery, they have given 26,000 here. Along with that, suppose they have given a sentence here, printing and stationery outstanding 2,000. That means what? 26,000 is the expenditure on which payment has been already done. 2,000 is also expenditure on which payment has been done. So total not done. 26,000 is the expenditure on which payment has already been done. 2,000 is the expenditure on which payment has not been done. So what is the total purchase? The total purchase will be 26,000 plus 2,000. But in our case, it is not like that. So we will directly take 26,000 as our purchases. Clear? Okay. Yes, sir. Okay, done. Good. Next. Total 37,000. Now, come to the paragraph. They have told you like this. What they have told? Write off 50% of sports material and 30% of printing and stationery. Write off means what? Write off means out of whatever purchases and opening stock we have in the stationery, we have opening stock plus purchases in the stationery. No, in that 30% should be written off. That means 30% has been used. 30% is actually the expenditure. Clear? Okay. So if 30% is the expenditure, what will be the closing stock? Closing stock will be 70%. Closing stock will be 70%. So 37,000 into 70% is 25,900. So the net amount is our expenditure, that is 11,100. This is nothing but 37,000 into 30%. This is nothing but 37,000 into 70%. Clear? This is the amount of stationery which has already been consumed by us. Next, miscellaneous expenses. 2 miscellaneous expenses. How much is it? 14,400. Next, secretary honorarium. 2 secretary honorarium. How much is that? 50,000. Next, grass seeds. 2 grass seeds. 2,600. Investment will not come as your expenditure. It is a balance sheet item. Clear? Next, purchase of sports material. Purchase of sports material. Wait. 2 sports material. There is opening stock. Now, what is the opening stock? Opening stock is 85,000. Okay. Plus, is there any purchases? Yes, sir. Purchase is there. How much? 68,000. Is there any outstanding which needs to be made payment? No, nothing. So whatever has been paid, only that much will consider as purchase. If there is any outstanding, then we would have added that also as our purchases. Yes. Okay. Total 1,53,000. Now closing stock will be 50% of this. That is 76,500. Sir, from where you are taking this 50%? Here. Write off 50% of sports material. That means 50% has been consumed. So the remaining 76,500 is our expenditure. Okay? Yeah. Anything else? Nothing. Now our income by subscriptions. By subscription. Member subscription. How much is the subscription? 2,50,000 plus is there any outstanding subscription receivable? Is there any outstanding subscription receivable? Yes. Outstanding subscription. On 31st March 26. How much? 42,000. Minus there is opening subscription receivable also. Opening subscription receivable also. That would have been received in the current year, and that amount would have been already included in this, but that does not belong to current year. Correct or no? So we will remove that amount. Outstanding subscription on 1st April 25. How much is that? 28,000. Net 2,64,000. Okay. Then member entrance fee. Member entrance fee, have they told anything? They have not told about any capitalization. So we'll show entrance fee as our income. If they would have shown that it should be considered as capital receipts, then we would have not shown in the income and expenditure account. Because it is not told anything, so we'll consider that as income. The next, by sale of old sports material. By sale of old sports material. Now don't tell me, sir, we should take only profit. No, sir. No, appa. This is not a fixed assets. This is not a fixed assets. There is no concept of profit in this. Rather, this is what? This is like a scrap. So we are selling it to Gujri, whatever sports material is there. So whatever we are selling it, that all becomes our income. Because earlier when we use this sports material, we would have passed it as a consumption. Correct or no here? Like this, we would have passed as a consumption. Now it is whatever we have consumed, after consuming whatever is left, it is a scrap. So that scrap is sold, that will become our income. Then next, hires of ground. By hire of grounds. How much? 28,000. Subscription for tournament, I have told you we will not take it. Why? Because subscription of tournament 60,000 will be adjusted against tournament expenses, and whatever is remaining, this subscription of tournament is there, no? This will get adjusted against this, and whatever is remaining will be shown as reserve in the balance sheet. Okay. Lifetime membership fee, I have told you earlier only we have discussed, this is a capital receipts, and that is why it will be directly shown in the balance sheet. Donations also same thing, sir, because they have told you donations and surplus on account of tournament. See, this is surplus on account of tournament. This is the donation. So both will be taken to balance sheet because it will be shown as reserve. So there is no other income. This will not be shown in income and expenditure account. Total it. The total here will come to 2,64,000 plus 15 is 2,79,000. 2,79,000 plus 25, 2,79,000, 3,00,000, 3,00,000, 3,00,000, 3,00,000, 3,00,000, 3,00,000, 3,23 plus 3,09,500. 3,09,500. This is 2,500. My mistake. 2,500. Here also it should be 3,09,500. Then the difference is 2 surplus. In bracket write down excess of income over expenditure. How much? 22,400. Okay. Yes. Last question, illustration number 7. During the year ended 31st March 2026, Surya Cricket Club received a subscription as follows. For ending 31st March 2025, it has received 12,000. For the year ending 31st March 2026, 6,15,000. For the year ending 18,000. So total it has received 6,45,000. There are 500 members, annual subscription 1,500 per member. On 31st March 2026, a sum of 15,000 was still in arrears for subscription. For the year ended 31st March 2025, ascertain the amount of subscription that will appear on the credit side of the income and expenditure account for the year ended 31st March 2026. Also show how the items would appear in the balance sheet as on 31st March 2025 and the balance sheet on 31st March 2026. So one is they are asking you how much will be income in income and expenditure account as on 31st March 26. Very simple, no? Don't worry about receivable, received, arrears, advance. Simple. 500 members, 1500 rupees. 7,50,000. This will be our income and expenditure for 2026. Not 2026 exactly, for 25-26. This is upper. Illi madidar nodi nimeshu. Okay, same thing. Clear? Next, what they have asked. Also show how the items would appear in the balance sheet as on 31st March 2025 and as on 31st March 2026. Okay, simple. If this is your balance sheet, let's take. If this is your balance sheet, then as on 31st March 2025, how much is receivable? How much is receivable? 12,000. How much is receivable? 12,000. See, for the year ending 31st March 2025, my receivable was, I'll explain it to you, listen to me carefully. See, these are the amounts that has been received. When received? Received as for 31st March 2026. That means it was received before 31st March 2026. But this belongs to which year? 31st March 2025. That means if this amount is received in 25-26, that means it was outstanding in 24-25. Hello. This amount belongs to which year? This belongs to 24-25. But this has been received in which year? This has been received in 25-26. That means for 24-25, this was outstanding. Correct or no? We are preparing balance sheet for what? 24-25. Correct? So as on 24-25, as on 31st March 2025, this was outstanding. Correct or no? Yes. So subscription receivable. One is 12,000. Yes. Plus, read here. On 31st March 2026, a sum of 15,000 was still in arrears for subscription for the year ended 31st March 2025. That means still 15,000 receivable, and that 15,000 belongs to which year? Belongs to 31st March 2025. That means as on 31st March 2025, 15,000 was receivable, and this was not received even in the financial year 25-26. Illu receive agilla. Financial year 24-25 allu receive agilla. So that means what? It is still outstanding. Yes, it is still outstanding. Whereas this 12,000 is there, no? This 12,000 was receivable on 31st March 25. That is, in financial year 24-25, it was not received. But the same has been received in financial year 25-26. Sir, where did you get this information? Here. During the year ended 31st March 26, Surya Club received subscription as follows. Subscription received as follows. So received before 31st March. In that they have received subscription of 31st March 2025. That means they have received subscription for 24-25. So this has been received for 24-25. But does it mean that for 12,000 rupees was receivable for 24-25? Yes. 15,000 was receivable for 24-25? Yes. So total 27,000. Clear? Yes. See, this 12,000 is also receivable for 24-25. This 15,000 is also receivable for 24-25. But going forward, this 12,000 received in 25-26. This 15,000 not received in 25-26. So in this one, 24-25 also we didn't receive. 25-26 also we didn't receive. Here 24-25 didn't receive. 25-26 received. 25-26 received. Clear? Okay, now we will prepare the balance sheet for 25-26. Subscription receivable. First we'll calculate 24-25. How much was last year receivable for 24-25? 27,000. Out of which 12,000 is already received in the current year here. See, 12,000 is already received. Yes or no? 12,000 is already received. So that will get reduced. So now 24, 25, what is remaining? 27,000 minus 12,000. So remaining is only 15,000. Correct? Huh? Yes? Okay. Next we'll come to 25, 26. Subscription received available for 25, 26. Now look here. How much is the subscription that is received for 25, 26? How much is the subscription that is received for 25, 26? 6 lakh 15,000. It is received. How much? 6 lakh 15,000 to be received. But how much is the income? You have only calculated, no? 500 members into 1500 rupees. So how much is the income? 7 lakh 50,000. This should be our subscription money that has to be received. But out of which, how much is actually received? Only 6 lakh 15,000. So what is remaining? 1,35,000 still receivable. So 24, 25, 26, 1,35,000. Okay. You can show here only 7,50,000 minus 6,15,000. So 1,35,000 is still receivable. That's it. Total 1,50,000. It is not yet completed. Have we received any advance? Yes, we have received advance. Advance received for next year. How much? 18,000. That should be shown on the liability side, correct or no? Advance subscription. How much? 18,000. 18,000. See, advance is a liability because tomorrow if he comes and asks, give me back my money, I will pay you when actually it is due. When I have to pay you, I will pay you that time. I don't want to keep an advance with you, so give me back my money. I have to pay. So it is an obligation. That is why it is shown as liability. I hope you guys have understood. That is it. That completes your chapter NPO. Clear? Yes, any doubts in this? Any doubts? Anybody who wants me to explain the subscription concept again? Any doubts in this? If you have any doubts, please put it in the comment. No doubts? Okay, let's start with the next chapter. So next chapter which we are starting is company accounts. So this chapter basically deals with shares, equity shares, preference shares, debentures. Sir, I am not understanding anything. What you are talking about? We have never heard about this. You have never heard about this. No problem. Who have already been from the commerce background would have knowing these parts. Who are not from commerce background will understand. Okay. Yes. Now, when we spoke about sole proprietor, how was his ownership shown as? His ownership was shown as capital account. His ownership was shown under capital. That means whatever capital balance was there, that was his ownership rights. Whatever is the balance in the capital account, that shows that much of the money he has invested in the business. Okay. Whatever capital balance is there, that shows that much amount of money has been invested in the business by the owner. Now, what is different in company accounts, sir? What exactly is different in company accounts? First, understand what is company. A company is where two or more than two people come together and form it. That means, usually, of course, there is a new concept of one person company also, but I am just telling you a whole idea of company. Company where two or more than two people will come together and form it. It can be 2, it can be 4, it can be 10, it can be 100, it can be 200. Okay. So there are different types of company. There are different type of companies. There can be private limited, there can be public limited. There can be private limited, there can be public limited. Then last there is something called as OPC, one person company. Now what is private limited, sir? What is public limited? You tell me, sir. See, private limited is a company which is set up by closely related people, or I can say not closely related. One second, one student has asked me a doubt. Let me check. Sir, had you taught about accounting equation? Yes. What is your doubt with respect to accounting equation, please? You are asking me whether we have taught it, or you are asking me. You want to know what is accounting equation, or you are asking whether we have already done it in the class? Okay, accounting equation you want to study. Okay, no problem. We'll discuss that also. Already I have explained it in a brief way in the beginning class, only in the introduction class. What are assets, what are liability, what is equity, how this actually works. We'll discuss that in today's class after some time. Before we close, last 10 minutes, we'll take that. Okay, no issues. Now let's come back to the discussion. Private limited company, it is having a setup where it is closely held. Closely held means what? The people who are owning the company, who are owners of the company, they are some or the other way knowing each other. They know one another. It is not that I will be a shareholder of a company. I mean, I am also one of the owner of the company, and Ratan Tata is also one of the owner of the company. No, this is not closely held. Closely held means, say for example, I, my friend, and my mother, we three of us come together and start a company. Understanding? Closely held. That means what? I know my mother, I know my friend. My mother knows my friend, and my friend also knows my mother. That means closely linked people, not related. I never use the word related. Closely linked people means each person knows the other person. So those persons who are closely linked to each other, what they do is they come up with the common objective. What is the common objective? Say for example, I and my friend, suppose, Say me and my friend decided to start one manufacturing entity. So what we do is, see, sole proprietorship cannot be used here. Why? Sole proprietor means there is only single owner. Here there is no single owner. There is me, there is my friend. So sole proprietorship will not come. Second concept is, sir, can we enter into partnership firm? Yes. Partnership firm means what? I and he come together, we draft an agreement, and in draft agreement we will write down, we both are partners, we are going to contribute so much of money into this business, and we are going to have so much of profit sharing ratio. Yes, that is partnership firm. But I don't want to form a partnership firm, sir. Why you don't want to form a partnership firm? Sir, in future I want to take money from the investors. Right? Everybody would have heard about the word investors, correct? So in that case, the partnership firm will not work correctly. Correct. That is right. So what I do is, we set up a company. The company is called as private limited company. Why it is a private limited company? Because we both are known to each other. It is a closely linked company, linked people forming a company. So that is why they are called as closely held. That means outsider cannot come as it is. That outsider should either know me or should know my friend. Then only they can come inside the company and become the owner. If they don't know anybody in the company, they will not have no entry in the ownership of the company. That is why it is called as closely held. That means known people will come and form the company. Known people will come and form the company. No outsiders will come. If outsiders want to come and join as a owners, he should either know me or he should either know my friend. Okay? Okay, done, sir. I understood what is closely held concept. Now tell me how my contribution and my friend's contribution will be decided. How you are telling that there can be two owners, correct? Yes, we'll discuss that. See, in proprietor, what happened? I invested 1 lakh and my business is going on. The entire 1 lakh what I have invested is shown in the capital account. Correct? Correct, sir. Now, what happens is, what changes here is, A, that is me, B, that is my friend. I want to invest 50,000. My friend wants to invest 50,000. We both want to invest 50,000 and we both want to invest together. Andre, it is not that I will start my own business with this 50,000, B will start his own business with 50,000. No. What I want is my 50,000 plus B's 50,000 put together. I want to start something together. We both have the same goal, same objective. So what I and my friend B does is, let's do one thing. We will both put 50 plus 50, make it 1 lakh and start a business. But this 1 lakh starting a business, I can start a partnership firm, but I don't want to choose partnership firm. So what I did, I started a company, which is a private limited. Okay, sir, private limited, understood, sir. Now tell me, sir, how this 1 lakh will be shown in private limited? This 1 lakh is also called as capital, but it is called as, one additional word will be included in this. It is called as share capital. Share capital. Sir, earlier you used here only word capital. Why here we are using the word share capital? See, why I am using the word share capital is, we two are also sharing this capital. This capital doesn't belong to me alone. Neither this capital belongs to my friend alone. We both share the capital. Out of this 1 lakh, I share 50,000. My friend also shares 50,000. So this capital is a shared capital. Understanding? That is why I call it as a share capital. Okay, sir, fine. Now, how do you distribute this 1 lakh, sir? I distribute this 1 lakh to Mr. A and to Mr. B and to Mr. B like this, 50,000, 50,000. Understood, sir. Correct, sir. Understood. Sir, in case of business, no, sir, the PAN, everything is mine. Here, company will have its own PAN. So, how will I have ownership for this 50,000? How will B have ownership for this 50,000? So, what I do is, to identify the ownership particularly, what I do is, I issue them a certificate. Sir, what does the certificate say, sir? What that certificate says is, you have invested 50,000 rupees in a way like this. 50,000 rupees is invested for 50,000 rupees is invested in a way where I have given you 5,000 shares of rupees 10 each. What? 50,000 is represented by 5,000 shares of 10 each. That means what? Each share, one share is having 10 rupees value. One share has 10 rupees as the value. So if I am having 5,000 shares, how much is my value? 50,000. Here also, my friend B will also have 5,000 shares worth 10 rupees each, and this is how his capital will look. Sir, why you have to issue the shares, sir? What is the logic behind that? The logic behind is simple. Say tomorrow, A doesn't want to continue this business. A doesn't want to continue this business. So what A can do? This 5,000 shares, whatever is there, he can sell it. He can sell it to Mr. C. So Mr. C will purchase 50,000 worth of shares of 5,000 shares of 10 rupees each. And suddenly Mr. C will become the owner and Mr. A will no more become the owner. So now who will be the new owners? C and B. C and B. Whereas in case of sole proprietorship, first of all, two people cannot start a business and call it as sole proprietorship. That was one disadvantage. Second, suppose as a sole proprietor I want to sell. Then how to sell? Sir, I have to create and do valuation of everything. All my assets, all my liability, alla valuation maadi, then I could have sold it and I could have closed my business. But the flexibility which the company offers is this. You have shares, you have value for each share, sell those shares. The moment you sell the shares, you are done. You are no more part of this company. You are no more part of this company. Clear? Everybody? Yes. So this is the advantage of company. Clear? So this 5,000 shares will be sold to Mr. C and Mr. C will become the new owner of the company. Okay, coming back. Sir, let's say we have not yet sold. Mr. A and Mr. B are only owners. Correct. So Mr. A has 50,000, Mr. B has 50,000. So what is the ownership ratio? How much ownership they are holding? They are holding 50% each. He is holding 50%, he is holding 50%. Sir, how did you decide? Two things. One, here also 50,000, here also 50,000. So 50,000 is to 50,000 is nothing but 1 is to 1. 1 is to 1. 1 is to 1 is nothing but 1 by 2. It is nothing but 0.5. So each person is having 0.5. That is 50% share. One more way is, sir, here also 5,000 shares, here also 5,000 shares. So 5,000 is to 5,000 is 1 is to 1. Now, one more thing Mr. A can do. What Mr. A can do is, Mr. A says, see, I don't want to sell the entire 5,000. I will sell only 2,000 shares to Mr. D. To Mr. D. Now, Mr. D will become also the owner. So, how many owners are there now? A, B and D. How much shares Mr. A is having? He is having only 3,000. Why? Out of 5,000 shares he had, he has sold 2,000 shares. Now, how much is Mr. B is having? 5,000. How much is D having? 2,000. Now, what is the ownership ratio? It is simple. 30%, 50% and 20%. 30%, 50% and 20%. Clear? Yes. So, can you understand the flexibility which the company offers? This is the whole reason why a company is formed, where any person can come in and any person can exit without any worry, without any major hiccups. Clear? Understand? Sir, partnership allu ಮಾಡಬಹುದಲ್ಲ sir? Yes, partnership allu ಮಾಡಬಹುದು. But partnership allu ಮಾಡೋದಕ್ಕಿಂತ ಮುಂಚೆ you have to do the valuation of the company, of the partnership firm. You have to calculate the goodwill. All those things will come. So, comparatively, this is easy. Comparatively, the transition is easy under this. Now, you understood why it is called as share capital, because the capital is shared among the owners. Now tell me, who are all the owners of the company? A, B and D. All three people are owners of the company. Clear? So this are called as shares. What? Shares. And when you multiply the price of each share, then it becomes share capital. So number of shares into price per share is equal to share capital. Clear? So in this chapter, we are going to understand how this share capital is accounted in the books of accounts. How this share capital is accounted in the books of accounts. Clear? Now, we understood what is private limited. Next is, what is public limited, sir? Not closely held. Not closely held. Sir, give us example. I hope everybody knows now stock market, right? If you purchase tomorrow morning, if you get up 9:30, you log into the market, you purchase one share of, say for example, you purchase one share of Infosys. When you purchase one share of Infosys, you are also owner. If you purchase one share also, then you are owner up to the extent of one share. Okay. Say for example, if a company has 1000 shares, if the company has 1000 shares and you are having one share, then you are also owner. Owner of how much, sir? Owner of 1 divided by 1000 into 100. So that will be 1/10. 1/10. In other words, we can write it as 0.1%. So you are owner by 0.1%. Clear? You are owner by 0.1%. Clear? So even if you hold one single share, you are a owner. Yes, understanding? Okay, done. Next. So not closely held, I am coming back. Infosys, you are having one share, you are also owner. Now, Infosys share is held by Narayana Murthy also. Narayana Murthy's daughter also. Narayana Murthy's son-in-law also, who was Prime Minister of UK. Now, you and Narayana Murthy are related. You and Narayana Murthy know each other. Do you guys party together? Where Narayana Murthy will party? He will come, and if you ask him to party, he will say, go and work for 70 hours. Correct or no? Narayana Murthy will say, go and work for 70 hours. No partying and all. Correct? So, you and Narayana Murthy are nowhere connected. You have never seen him. You have never met him. You have never had a chai with him. Correct? So, you don't know Narayana Murthy. But you both are having invested in the same company called as Infosys. So, this Infosys is called as example of public limited company where it is not closely held. That means public directly can invest the money in those companies. Public, whoever wants to invest, can buy the share of that company and become owner of that company. Whereas in case of private, the name itself says private. This company is private. It is only for closely linked people. If you are not closely linked, you cannot invest in this company. If you don't know anybody in the shareholders, you can't invest in that company. Whereas in this company, whether you know, whether you don't know, you can invest in the company. Few of the examples of public limited companies, all your listed companies are public limited companies. That is why anybody can take the shares. Every Tom, Dick and Harry can purchase the shares from stock market. Clear? Now coming to one-person company. Sir, what is one-person company? See, this is the new concept which was introduced very recently, like if I'm not wrong, around 10 years back. So one-person company means what? There is only one shareholder. There is only one shareholder. Clear? There is only one shareholder. Sir, you just now told there should be minimum 2 shareholders. Correct. That is for private limited and public limited. Okay. Private limited, if you have 2 shares, that is enough. Two shareholders, that is enough. But in case of one-person company, they told one member can also hold shareholders. That means all the 100% shares can be held by one person, and that is called as one-person company. Sir, then what is the difference between this and sole proprietor? What is the difference between this and sole proprietor? There also one person is the owner. Here also one person only owner. No, sir. You are right. There also one person is owner. Here also one person is owner. But the thing is, here the transition. Tomorrow I want to sell it. I can sell it easily because it is a one-person company. Whereas, yeah, even in sole proprietor you can sell it. But since there is no governing body for sole proprietor, the valuation will become little bit difficult. Whereas one-person company is governed by Ministry of Corporate Affairs, the valuation concept becomes very much easy and regulated. That is why, that is one advantage between one-person company and sole proprietorship. Clear? So technically speaking, in one-person company also there is only one owner. In sole proprietorship also there is one owner. Only difference is one-person company transition or migration is very easy. Sole proprietor transition or migration is little bit difficult. Understanding everybody? Yes. So in this chapter we are going to study about share capital, and that share capital has something called as equity shares. Equity shares means what, sir? Which is showing us the ownership. Which is showing us the ownership. Equity shares means ownership. So who all are having equity shares are called as owners of the company. Suppose A has 5,000 shares, B has 1,000 shares, C has 1 shares, D has 999 shares. If all these shares are equity shares, then all are owners of the company. All are called as owners of the company. Clear? All these people are called as owners. Clear? Understanding everybody? Yes. Now next concept comes, what is then preference shares? What is the preference shares? See, preference share does not give you ownership. It does not give you ownership. Then what it gives, sir? It gives return. Ashte. It doesn't give you any ownership. Clear? Now, staunching difference between these two. Sir, okay, understood. Now I invested in shares of a company. What will I get in return for investing, sir? You will get an income. Sir, how will I get income, sir? This income will be in the form of dividends. Sir, what is dividend, sir? What is dividend? CL. Suppose you invested in company ABC Limited, and now ABC Limited has done, say, for example, 1,000 rupees profit. This profits has to be distributed between two shareholders, A and B. A holds 50%, B holds 50%. So what ABC Limited does is, no, 1,000 rupees is profit. Yes, 1,000 is profit. Belongs to whom? Belongs to the owners, A and B. So what they do, out of this 1,000 rupees, we will keep 500 rupees separately. Why? This 500 rupees will keep it as reserve. Reserve for what? Reserve for expansion. Expansion of what? Expansion of business. Expansion of business. Remaining this 5,000 is for what, sir? Sorry, remaining 500 rupees is for what? The remaining 500 rupees we can give it to our owners as the profit. The profit which we earned, 1,000 rupees, out of which 500 rupees we want to keep it for expansion. And when we keep it for expansion, it is called as reserves. The remaining 500 is there, no? I want to distribute it to my owners. Okay. You want to distribute it to owners. So what you do is, you distribute this 500 to owners in the ratio of 50%, 50%. So 250 to A, 250 to B. This profits which are distributed to A and B is called as dividend. Is called as dividend. So when I invest in a company, one of my motto is to earn the dividend. What is dividend? Share of profit. See, what is the total profit? 1,000. Out of which 500 is kept aside? Yes, sir. What is the remaining? 500. Entire 500 came to me, yeah? No. Only share of that profit came to me. How much is your share? 50%. Only up to 50% it has come to you. That is why that share of profit is called as dividend. Dividend is nothing but my share of profit. My share of profit is 250, that I am receiving it as dividend. So one of the primary objectives of investing in the equity shares is to get dividend. The second is appreciation. Appreciation. Not appreciation. Very good, very good. Not that appreciation. Capital appreciation. What appreciation? Capital appreciation. Sir, what is this capital appreciation? You know everybody. Sir, I invested Infosys today for 1500. After 1 year, I have received a dividend of 300 rupees and this 1500 has become 1600, sir. 1600, sir. Oh, very good. From 1500, it has gone up to 1600. Here, has my share value has been appreciated? Has it appreciated means what? Going up. Has my share value appreciated? Yes, my share value has appreciated. So, my expectation of investing in a private limited is to have the appreciation of value. So, these are my primary two source of income. Clear? Okay? Yes, sir. Now, under preference share, there is usually one source of income, that is dividend. Sir, why there is no appreciation? Usually there will be no appreciation. I will tell you why. Biggest revelation to you. These shares are there, no? The money is never given back, or I'll say returned. This money is never returned to shareholders, exception winding up. I'll explain it to you. Wait. The money needs to be returned. No exception. No exception. That means preference shares, whoever has invested in preference shares, the money has to be returned back to them. Whereas in case of equity shares, this you leave, exception you leave. In case of equity shares, it is like a Tirupati Hundi. Once you put the money inside, done and dusted. You will never receive the money back from the company. So, for example, Mr. A, B, and C invested 30,000, 40,000, and 30,000. Put together, they all invested 1 lakh. The moment they invest 1 lakh, say in ABC Limited, done and dusted. In this 30,000, Mr. which ABC Limited is having of Mr. A will never be paid by ABC Limited back to Mr. A. Never. It will never come back. ABC Limited will never pay 30,000 back to Mr. A. Sir, yes. Mr. ABC Limited will never pay back 30,000 to Mr. A. Neither it will pay anything to Mr. B, neither it will pay anything to Mr. C. So that means once we invest our money, it is gone. It is locked? No. What Mr. A can do is, Mr. A can go and sell to Mr. D. Mr. A can go and sell it to Mr. D. But understand, here A exited, D entered. But my question, in the form of exit or in the form of entry, did you see any time company paying the money back? No. Did the company pay back to A? No. Who paid? D paid money to A. Because D paid the money, A gave the shares. Ashte. But did company pay the shares back? No. Did the company pay the money back? No. Understanding? So, equity shares will never be returned. Never returned. The money will never get returned. Here, money needs to be returned. Money needs to be returned. Understanding? Yes. So, your equity share, once you put in, it is gone and done and dusted. Understanding? Sir, now you tell me about this exception, sir. I am waiting for that point, sir. See, exception winding up means, I told you, equity shares is like a Tirupati Undi. Once you put in that Undi, it belongs to temple. Now, tomorrow, suppose you put in one temple, the money, the moment you put the money in the temple, it is for temple. But tomorrow, let us say temple says we are going to discontinue the temple. We are going to close down the temple because we no more can see after the temple. So whoever has paid us the money by donation, it is there in our bank balance. So we are going to pay you back, which never happens in reality, but I am just saying. Understanding everybody? So you till date you have invested 1000 rupees in the temple. Now temple says yes, everybody has invested money in the temple. You have given donations and everything. But what is happening is we are unable to run the temple. So we want to close the temple. And whatever donation has been done, we have never been used the donation. So it is everything is sitting in the bank account. Now I want to close the temple. So whatever money is there in the bank account, I will return it back. So now what is happening here? Temple is getting closed. In the same way, when the company gets closed, the word used is winding up. Company gets closed, andaga, the word we use is company gets winding up. When company winds up means what? Company decides to close. When company decides to close, only that time, equity shareholders will get the money back. Equity shareholders will get the money back. Clear? Till then, equity shareholders will not get the money back. That also I'll tell you what, sir. If you are having ABC Limited and you want to close the company, yes, sir, I want to close the company. Now, what is the bank balance, sir? Bank balance is 10 lakh rupees. How much? 10 lakh rupees. How many shareholders are there, sir? A, B, C, D. A, B, C, D. So 10 lakh you can distribute among A, B, C, D. Wait. Why, sir? Wait. Do you have any payable? Yes, sir, I have payable. How much is the payable, sir? Sir, payable is 9 lakh. So what your Companies Act says, what is the rules and regulations of this is, out of 10 lakh, first you pay 9 lakh to outsiders. First you pay 9 lakh to outsiders. After that, what remains? 1 lakh, sir. That you can pay to your owners. That you can pay to the owners. You are understanding? So understand this. Now what is happening? Company, even though it gets wind up, you will get money at last. ಅಂದ್ರೆ ಎಲ್ಲ ಬೇರೆದವ್ರಿಗೆ ಕೊಡೋದೆಲ್ಲ ದುಡ್ಡು ಕೊಟ್ಟುಬಿಟ್ಟು ಇನ್ನೇನಾದರೂ ಉಳಿದ್ರೆ ಅದು ನಿಮ್ಮ ಹತ್ರ ಬರುತ್ತೆ. ಸರ್, ಏನು ಉಳಿಲಿಲ್ಲ, ನಡೀರಿ ಮನೆಗೆ. Go home. Kuch nahi milega. Nothing you will get. If something remains, then you will get. If nothing remains, nothing appa. Go home, eat one curd rice, sleep. That's it. Clear? Whereas this one is there, no? This one, preference shares. Nothing doing. If money is remaining, first pay the liability and pay the preference shareholders. In example, I'll tell you. Sir, bank balance 10 lakh. Bank balance 10 lakh. Sir, 9 lakh preference share capital. 9 lakh preference share capital. Bank balance is 10 lakhs. 9 lakh preference share capital is outstanding. That means what? We have taken we have taken money and issued preference shares. Hello. When we take the money, we issue the shares. It can be equity shares, it can be preference shares. If you issue equity shares, it is ownership. Last case I have explained, no? A, B, C, 5,000, 3,000, 2,000 shares. What is this 5,000 shares? If you issue it as equity shares, they become owners. Correct? So, preference shares I have issued worth 9 lakh rupees. Now, what your Companies Act says is, out of 10 lakh bank balance, chup chap, close your mouth, pay the preference shareholders first. After paying preference shareholders, if anything remains, then you pay to equity shareholders. So equity shareholders comes where? It will come last. Why? Because they are the owners. Owners will always bear all the losses and all the responsibility, because all the profits and all the benefits also go to owners first. Owners will have profit, owners will have benefits. In the same way, when you are getting rewarded, you should also be accountable for the risk. Correct? So, just like how profit will be distributed to owners, in the same way, losses or liability will get distributed to the owners. That is why the name is preference shares. Preference shares. When the company is getting wound up, you are going to give preference to this shares in comparison to your equity shares. We are giving preference to these shares when we compare it to our equity shares. Who is coming? What is the preference? Sir, preference is first to preference shares. First pay the money to preference shares. Then you pay to equity shareholder. Are we giving priority? Are we giving preference? Are we giving importance to these shares? Yes. That is why the name says preference shares. Importance is given to these shares first, then equity shares. You are understanding? So this is why they are never our owners. Why? Because they are not taking any risk. They are not taking any risk. One more difference is voting rights. Voting rights. These people will not have any voting rights. These people will have voting rights. Sir, now what is this voting rights, sir? Now suddenly you are bringing new concept. What is voting rights, sir? I will tell you. What is your voting right in our country, Appa? You can elect anybody and make them. You can vote for a person and that person can become MLA, MP. Why they are becoming MLA or MP? To run the city, to run the state, to run the organization, something like that. Correct? In the same way, say for example, ABC Limited is a company. There are three partners, A, B, C. A is having 50,000 shares, B is having 10,000 shares, C is having, suppose, 40,000 shares. Now, my question to you, how much money A has invested? Sir, 50,000. How much money C? 40,000. How much money B? 10,000. Now, who has invested extra? A, sir. A has invested highest, first, second, third. Okay? Yes, sir. Now, problem when most of the businesses where they fail, you know, this partnership and all where they fail is, if these three people come and try to do business, Mr. A says something, Mr. B says something, Mr. C agrees to Mr. A, but he doesn't agree to Mr. B. Or vice versa. He may agree to B, he may not agree to A. Now fight will start. Fight will start. No, 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 no. I will, mine is correct. You are correct. He is correct. They are correct. Partnership formal, is a problem. Partnership formal, they start fighting. Clear? So what they did in company, you know, they said, hold on, wait. How much you have invested? 50,000. What is the total capital? 1 lakh. Out of 1 lakh, you have invested 50,000. No? So 50% of the company belongs to you. 10% belongs to you. 40% belongs to you. So 50% whatever belongs to you, no, you have a voting rights of 50%. You have a voting rights of 50%. He has a voting rights of 10%. This has a voting rights of 40%. In other words, whatever your shares are there, no, each share is a voting right. Each share you are holding will give you a voting right. How much shares I am holding? 50%. So you have 50% voting rights. This fellow has 10% voting rights. This fellow has 40% voting rights. Now, in partnership, they fight and partnership gets dissolved. In private limited company or public limited company, what will happen? No? They all three come and make a meeting. And in meeting, what they do is they keep this topic. See, this is the topic which Mr. A, B, C, all are having a different views. So what we do is let's vote. Let's vote. Democracy. So Mr. A said yes. Mr. B said no. Mr. C said yes. So total yes, 2. Total no, 1. What is the ratio? Sir, A 50%, C 40%. 90% there are democracy wins. So the motion is passed. The decision gets implemented. Even though B says no. Why? Because he is holding only 10%. Now let's take one more example. Sir, Mr. C has a plan for which Mr. B and Mr. A is not agreeing. Okay, fine. What they do? They again come for a meeting. Mr. C places his plan. Mr. C places his plan. Now what happens? Mr. A and Mr. B says, no, we don't agree to this. Done. Plan gets failed. Why? Because 50 plus 10, 60%. How much is C's share? Only 40%. Fail. Complete fail. Now you may ask me a question. Sir, what happens if B and C agree, A doesn't agree? 50%, 50%. Both are 50-50%. Then what happens, sir? Then what happens is we again go and meet with a bottleneck here. That is why usually when you see company, there is 51% is always held by some strong people. Why? Because out of 100, for 51 is held by somebody. That means what? Decision is taken by this 51%. Why? 51% is always greater when compared to the remaining balance. Remaining balance is how much? Only 49%. Clear? Understanding? So this is how. So 50-50 adre, you have to convince somebody to vote in his way. So if B gets convinced, he will vote with A. If he votes with A, suddenly A and B will win. If B doesn't get convinced and get convinced with C, again you will hit with a bottleneck. So that time what you have to do? You have to convince Mr. A. If A also agrees, then the vote gets won. Otherwise, C only say, no, I told the idea, but I am only not agreeing to it, and it goes back to A, then again it gets lost. Clear? This voting power is usually given only to equity shares. It is not given to preference shares. Sir, you use the word usually, sir. This is dangerous, sir. Usually is a dangerous word. Sometimes preference share holders can also get a voting right. Exception. Can get voting rights. Can get voting rights. But only getting voting rights doesn't make them owners. Rest everything condition remains same. You have to repay them. You have to give preference to them. You have to give dividend to them. Clear? Okay. Now, one more interesting part I will tell you why they are preference shares. Suppose you earned a profit of 100 rupees. You earned a profit of 100 rupees. And there are preference shareholders for whom you have to give the dividend. For whom you have to give the dividend. Now that dividend is coming to 100 rupees. That dividend is coming to 100 rupees. And there are equity shareholders who are also expecting 50 rupees as dividend. So you cannot say out of this 100, I will pay 50 to preference shareholders, I will pay 50 to equity shareholders. Not allowed. Out of this 100, first you have to pay the dividend of preference shareholders. After that, if anything is remaining, then you can pay to equity shareholders. Suppose I have 120 rupees as a profit. First you pay 100 rupees to preference shareholders, then remaining 20 is there. No, out of that you can pay to equity shareholders. Are you seeing? Even here, preference is being given to preference shareholders. Preference is given to preference shareholders. The preference is not given to equity shareholders. First priority is given, first preference is given to the preference shareholders. That is why they are called as preference shareholders. Clear? But always remember, they will never become owners of the company. They will never become owners of the company. Next, the last part. Our debentures. Sir, what are debentures? Sir, debentures is nothing but loan taken by the company. Debentures is nothing but loan. Debentures is nothing but loan. Clear? So, no ownership. No ownership concept. Debentures means it is as good as loan. So what I do is, suppose I need 1 lakh rupees, but I can't go to bank because bank is saying I can't give you loan. Bank is saying no, I will not give you loan. So what I do is, I go to A, B and C. I say them, see, I need 1 lakh, can you please contribute? They say okay, done. A says I will give you 25,000. B says I will give you 35,000. C says I will give you, how much is this? 30, 60, 40,000. 40,000. Yes. What is the ratio they gave? 25%, 35%, 40%. Sir, are they owners of the company? No. No ownership. No ownership. Okay, sir. Done. So they gave the money, no, sir? Yeah, they gave the money. Can I use it forever? No. Repayment mandatory. Repayment mandatory. That is why they are not the owners. Sir, what else, sir? What else is the difference? Fixed interest rate. Fixed interest rate. See, if you take a loan from bank, what will happen? Sir, they will charge an interest to us. Correct. Same, sir. It will work in the same way. Instead of taking loan from the bank, I am taking loan from Mr. A, B, C. So I have to pay them interest and I have to pay the principal back also. Then why we can't take the bank loan, sir? Why usually debentures is preferred than bank loan is simple, sir. In bank loan, there is a concept of EMI. Every month you have to pay the EMI. But in case of debenture, what happens is debentures are usually issued like this: 3 years debentures, 5 years debentures, 10 years debentures. So what happens is for 3 years I will pay only interest. At the end of third year, I will pay the principal. I will pay the principal. So every month I don't have to pay any EMI. Every year I will pay interest. Once in a year I will pay the interest, and at the end of the debenture period I will pay the principal back. So 5 years I will pay interest. At the end of 5th year I will pay principal back. Whereas in case of bank loan, every month you have to pay EMI, which includes principal as well as interest. As well as interest. You are understanding? Yes? Okay. See, understand one thing. If you look very carefully, debentures and preference shares are having similar nature. Don't you think? Don't you think? Sir, here also we need to repay the money. Here also we need to repay the money. Here we have to pay the dividend. Here we have to pay the interest. Right? Both are having the same nature. Correct? So repayment is there. Here dividend. Here interest. Only thing that changes, here we call it as dividend. Here we call it as interest. Correct. So that is why this both will be considered as liability. This will only be considered under share capital. This will only be considered under share capital. This will be shown under liability. Under liability, what head, sir? Non-current liability. Non-current liability. Earlier, before there was Ind AS, before there was Ind AS, we used to show preference sales also under share capital. Okay, but Ind AS said no, that is wrong. Why it is wrong? Because you are repaying the money, you are paying fixed, you are mandatorily paying the dividend also. Then how you can go share it as share capital? Because share capital means you will never pay back the money. But here you are paying back the money. So that is why what your new company rules or your new accounting standard, including Ind AS, now our accounting standards, old accounting standard, that is Indian GAAP accounting standard, generally accepted accounting principles are also revised. Old accounting standards as well as Ind AS, both are talking in the same manner. Both say this should be treated as liability. Even this should be treated as liability because debentures and preference shares nature is same. So they are treated under liability. Only this will be shown as share capital. This will be shown as share capital. Clear? Yes. I hope the concept is clear. You understood what is equity shares, what is preference shares, and what is debentures. Yes? Okay. Now, let's end the conversation here with respect to this chapter. We'll continue in the next class. So, one student, Shivam Thakur, has asked us as to, sir, teach us about accounting equation. I have already told in a brief manner. I didn't use the word exactly accounting equation, but I have kept on repeating one sentence. Why there is a double entry system in the balance sheet? Why your balance sheet will always tally? See, this is your balance sheet. Yes. First is your fixed assets. I told you we should use one more name, property, plant and equipment. Say our property, plant and equipment is 1 lakh. Our non-current assets. Hello, all this has been taught. Huh? Non-current assets, current assets has been taught. Say is also 50,000. And suppose our current assets is 3 lakhs. What is the total? 4 lakh 50,000. Okay, this is how balance sheet usually look. Debit side, I mean asset side also 4 lakh 50,000, liability side also 4 lakh 50,000. Yes, everybody is following? Huh? Okay. Now understand one thing. You need to be very careful and look. Is this side same as this side? Correct? Yes, sir. That is why it is called as balance sheet. Both are getting balanced. Correct? Yes, sir. Correct. You are right, sir. Now, let me tell like this. Sir, I have not given any information about this. I have not given any information about this. Let's say. Can you find out what is the current liability? Can you find out what is the current liability? If I have not given, let me erase this only. Sir, I don't know this. I don't know this. Can you find out the answer? Yes, you can find out the answer. How, sir? How we have to find out, sir? What is the total? Sir, total is 4,50,000 minus 80,000 minus 1,20,000. Okay, very good, very good. Now my next question. I have not given you this total. Now what you will do? I have not given this total. I have not given this. What you will do? Sir, what to do, sir? You only told. No, always this is fill balance. Very good. What is the total assets? 4,50,000. Sir, balance sheet is nothing but total assets is equal to total liabilities. Correct or no? This is what is balance sheet, because this side will be equal to this side. So total of the assets will be equal to total of the liabilities. Yes, sir, correct. So you have total liabilities is equal to, or just to avoid, I will say like this. Now, you know what is total assets? Huh? Yes, sir, I know what is total asset. How much is it? 4,50,000. Okay, you know total liabilities. That is the problem, sir. I don't know. What is it? Sir, I have capital. Very good. Write down. Capital plus non-current liability plus current liability is equal to 4,50,000. Yes, sir. You have capital? Yes, sir. I have capital. How much is the capital? Sir, capital is 1,20,000. Very good. Non-current liability you have? Yes, sir. I know what is non-current. You know what is current liability? No, sir. That is what I want to find out. Very good. Find out. X is equal to 4.5 lakh minus 2 lakh is equal to X is equal to 2.5 lakh. Did we able to find out? Yes. How did we find out? Sir, because we know this total is equal to this total. Because we know this total is equal to this total, we just reduce this. Sir, this plus this is equal to this total. No. So out of this total, we reduce this 2. That time we'll get this answer. Very good. So the equation is total assets is equal to always total liabilities. Clear? Yes, sir. Clear, sir. Next. Next, same balance sheet. Let me do like this. Find out what is the capital. I want to know what is my capital. I want to know what is my capital. Can we find out? Sir, you have not given figures only, sir. How to find out? Array, we can find out. How, sir? Have you got all the figures on this side? No, sir, we have not got. But have you got all the figures on this side? Yes, sir, we have got. Total it. Fix. See, what is that formula of total assets? How do we arrive at total assets? Sir, how do you arrive at fixed assets plus non-current assets plus current assets? Very good. 1 lakh plus 50,000 plus 3 lakh is equal to 4.5 lakh. Oh, great. Now use the same equation. Total assets is equal to total liabilities. Correct? What is total assets? 4.5 lakh. What is total liability? Sir, total liability is 2,50,000 plus 80,000. What is remaining plus X? X is what? X is capital this time. Correct? So X is equal to 1.2 lakhs. Ashte. Understanding everybody? Hello? You are getting the equation? Hello? All of you are following, no? Yes? This is accounting equation, appa. This is accounting equation. In other words, say, hold on. In other words, see, instead of first finding out this total assets, then calculating this, can I shortcut this? How do you shortcut that, sir? I will shortcut it. See here. Fixed assets plus non-current assets plus current assets. Total assets is equal to total liabilities. This is the definition. This is the formula. Total assets is equal to total liability. Now, can I write total liability? What will come? Sir, capital plus non-current liability plus current liability. Okay. What is fixed assets? Sir, 1 lakh. What is non-current assets? Sir, 50,000. What is current assets? 3 lakh. What is capital? We don't know, sir. What is non-current liability? 80,000, sir. What is current liability? 2,50,000, sir. Okay. Can we find out X? Very easily, sir. This total 4.5 lakh, sir. Minus, if this also comes on this side, it will become minus. Minus 2 lakh is equal to X. Not 2 lakh, sorry. 3.2 lakhs. Sorry. Wait. 2 lakh, 3 lakh, 30,000. So the answer is 1.2 lakh. See, earlier we first solved this equation. Here we found out the answer. Then we solved this equation. Then we use this in this, and here what did we do? Instead of solving two times, I returned total assets, total minus here only. Clear? Now look at this. Can I improvise this formula? Yes, I can improvise this formula. How do you improvise, sir? You said fixed assets plus non-current asset plus current assets is equal to capital plus non-current liability plus current liability. Can you improvise? Yes, sir. Fixed assets plus non-current assets plus current assets. If I take this here and this also here, because we want to find out capital, no? So I will take this two here. Non-current liability minus current liability is equal to capital. That is what we have done here, no? We took this and these two items came on the other side. Correct? Yes? Everybody is following? Fixed assets plus non-current assets plus current assets minus non-current liability minus current liability is equal to capital. Now, I will rewrite this as total assets. Can I write it like this? Yes, I can write it. Why? Because total asset is nothing but fixed assets plus non-current assets plus current assets. Correct. Minus, can I write non-current liability plus current liability as total liabilities without capital? Sir, here this total liability and this total liability is same, huh? No. This total liability includes capital. So we'll not use the word total, not to confuse you. Let's write down like this. Minus, can I say liabilities at least, is equal to capital. Sir, non-current liability plus current liability is nothing but our total liabilities. So I will say, I will not use the word total to not confuse you. Okay. This is our assets, total assets. This is our liability. So assets minus liability is equal to capital, can I say? Now this is your accounting equation. Capital can also be called as net worth. Net worth, total assets minus liabilities. Sir, what is the meaning of net worth, sir? What is the meaning of net worth is nothing but what is the value of your business. The value of the business is always our capital balance, correct or no? I have told you no earlier also. If I am a business owner and I am investing in the money and I am earning the profit, that profit gets added to where? To my capital account. So ultimately, my capital balance shows what is the total worth of that business. Clear? So capital also called as net worth. This is your accounting equation. Net worth is equal to total assets minus liabilities. Total assets minus liabilities. You can solve using this equation however you want, provided you have the numbers. So in this, whatever, where was it? So in this, if I don't give, if I have given this number, now I didn't have this number, you found out. Suppose I have not given you this number. These two numbers are not there. I have given you this number and these numbers are there. Can you find out what are these two? Yes. How, sir? Total is 4.5 lakh, sir. Out of 4.5 lakh, if you minus 1.2 lakh, how much is remaining? Sir, what is remaining is 3.3 lakh. That is your liabilities. You can't find out how much is non-current liability, how much is current liability. But total we can find out. Yes. If you find out total, sir, this total is 3.3 lakh, still your balance sheet will match. Correct or no? So this is your accounting equation. Accounting equation is nothing but, in simple terms, your asset and your liability side will always match. If any number is missing in any equation, you can find out using the other numbers. Suppose, let's say, I have given capital, I have given non-current liability, I have given current liability, but I have not given you fixed assets. Can you find out? Yes. Total this 4.5 lakh. Out of this, you reduce this 3 lakh, you reduce this 50,000. Whatever answer is remaining is your fixed assets. Understanding? This is your accounting equation. Sir, why capital is called as net worth? I will explain it to you. Listen to me carefully. Again, I am explaining it to you. Sir, ultimately, when you want to value a particular person, how do you value, sir? ನೀವು ಯಾವುದೇ ಒಂದು ವ್ಯಕ್ತಿನ ಎಷ್ಟು ದುಡ್ಡಿದೆ ಅಂತ ಹೆಂಗೆ ಕನ್ಸಿಡರ್ ಮಾಡ್ತೀರಾ? ಸಿಂಪಲ್ ಸರ್, ವಾಟ್ ಐ ವಿಲ್ ಡೂ ಇಸ್, ಅವ್ರದ್ದು ಎಷ್ಟು ಆಸ್ತಿ ಇದೆ ತಗೊಂತೀನಿ ಸರ್. ಆ ಆಸ್ತಿಗಳಲ್ಲಿ ಅವ್ರದ್ದು ಎಷ್ಟು ಸಾಲ ಇದೆ ಅದನ್ನು ತೆಗೆದಾಕ್ತೀನಿ ಸರ್. ಅವ್ರದ್ದು ಎಷ್ಟು ಆಸ್ತಿ ಇದೆ, ಐ ವಿಲ್ ಟೇಕ್ ದಟ್. That means I will take how much money, how much property he has. I will take everything. I will pull it. From there, I will minus, I will reduce whatever loans or payable he is having. That is how you value an individual, right? Suppose you find your friend. Nan friend ಒಂದು 5 ಕೋಟಿಗೆ ಬಾಳ್ತಾನೆ ಸರ್. 5 crore, he is worth 5 crore, my friend. How did you determine this 5 crore worth? Sir, simple sir. He has 3 properties. And 3 properties put together is 7 crore rupees. Oh, howda? Okay. And then he has 3 crore FD, sir. Oh, total 10 crores there only. Oh, very good. But you know what, sir? He has property of 7 crore. He has 3 crore FD, no, sir. But he has a loan also of 5 crore, sir. To construct that property of 7 crore, he has taken a loan of 5 crore. Oh, okay. So how much is having, sir? Sir, he has 7 crore worth of property. Plus he has 3 crore FD. Total 10 crore, sir. Minus he has loan, no, sir. You take out the loan out of it. Oh, loan taken out, 5 crore. How much is remaining? 5 crore. That is his worth, sir. Correct? Same appa here also. What is my total assets? What is my total assets minus my liabilities will give me answer, which is nothing but my capital, which is nothing but my net worth. This side total assets is nothing but none the total property, my total property and my total assets. This is nothing but our payables. Out of your total assets, if you take out the liability, what balance is remaining? That is the worth of that business. And that worth is called as net worth. Net worth is nothing but your capital. So there is no difference between capital and net worth. Clear? Your capital is your net worth. Understanding? So what is the formula of net worth? Total assets minus liability will give you net worth. So total assets minus liability will give you net worth. In other words, total assets is equal to net worth plus liability. Correct, appa? Total assets is equal to net worth plus liability. Total assets is equal to net worth plus liability. In other words, total assets is equal to total liabilities. Here is what we started from. Here is where we arrived. Yes, everybody understanding? Yes, Shivam Thakur. I hope it is clear. Any doubt about this equation? Accounting equation. Yes or no? Available or not available? Disconnected? What happened? Okay. Understanding? Yes. So this is your accounting equation. Any doubts with respect to this? Any doubts with respect to this topic? No? Okay. Chalo. Okay, guys. Thank you. We'll end the class for today. In next class, we'll continue this chapter. Very easy chapter, provided you know your journal entries correctly. If you don't know the journal entries, it is very difficult to close this chapter. Am I clear? Yes. Okay. Thank you, guys. Bye bye. Take care.